Some of you may also recognize Melissa as a speaker from the 2021 RICO event, where she presented an overview of USAID's work in coffee. Melissa, thank you so much for putting this panel together, and I am looking forward to learning more about price risk management along with the audience.
All right, thank you so much. So without further ado, and so I just wanted to briefly announce our first two panelists, and they are two panelists, and they will be giving you a bit more background on their work as part of the first, the initial question of the panel. So we've got Charles Kanqua, who is the Technical Services Coordinator at Farm Africa, and he's all the way on the east coast of Africa, so we appreciate him staying up a bit later to join us. And then we have Yola Ruth Nunez, who is a Senior Social Performance and Capacity Building Officer at Oicocredit, and she is based in Peru. So we've got quite an international team spanning multiple time zones, and I'm comfortably sitting here in Washington, D.C. So I'm going to start out. So the agenda will be pretty simple. First, just a bit of introduction and framing from me, and then the bulk of it will be a panel discussion, and we will hear Charles and Yola-Ruth's expertise around helping smallholders and their partners, such as buyers and lenders, other lenders, address financial risk management. And then we'll have an audience Q&A. So that panel discussion will be about 25 minutes, and then we'll have 10 to 15 minutes for that Q&A. So just to jump into the presentation. So we, financial risk. The main risk that we're talking about is price risk, market volatility. Smallholders in coffee, even if they're specialty producers, they're still very much tied to the C market, and we have seen the C market swing up and down multiple times. When I first started working in the coffee sector in the 2000s, that was the price crisis where it was $1 a pound, and then recently we saw that happen again. And of course, in real value, $1 today or last year is even worse than $1 in the early 2000s. So producers can really be stuck. And we've seen in some cases where producers might have set up a contract at a lower price, and then when if the market price goes up, maybe they want to default on that contract and try to sell it in the open market. So prices rising, while good for smallholders, can be bad for buyers. So we've seen the swings impact buyers and smallholders in different ways. So again, when there are sales contracts or purchasing contracts, those are sort of related risks that price risk impacts, as well as loan repayment. So again, these risks don't just impact the smallholder, their family, and their community, and can they get food on the table and send their kids to school? But it impacts buyers, it impacts lenders, and certainly it also impacts donors to the degree that assistance and governments to the degree that social assistance programs are needed. The ideal is to address these risks so that smallholders are resilient and can thrive rather than survive. So of course, again, many benefits, of course, improve smallholder well-being and empowerment, that those smallholders, they are not just stuck on the price, but they are able to negotiate. They're in a stronger position. More supply reliability, very important for buyers. Coffee farming is attractive long-term. Again, when you see that, long-term, they're not going to be stuck in this cyclical market and with an uncertain future, they're more likely to go into coffee. So that reliability is a long-term issue when we are managing risks. Producers, smallholders, businesses have more resources to invest in quality, invest in innovation, in upgrading, and in efficiency and customer service. When you're not having to worry about just getting by and paying back last year's debts because there was a price crash, you're able to invest in the future. That benefits us all. And then of course, again, reduce risk for lenders. They're able to get those loans repaid. So some of the approaches, and Charles and Yola-Ruth are going to talk about these much more. I just wanted to overview them here. Alternative market channels. We have seen auctions where producers can get quite frankly, astronomical prices. Usually very small, pretty small auctions, a small group of producers, small co-ops. But there are some other exchanges, for example, direct trade. And we saw more of that happen during COVID, where buyers and producer cooperatives, producer associations, and some larger farms were getting online and selling. So the pandemic has pushed that alternative market channel a little better. Again, not being tied to the sea, but selling your coffee on quality, selling it on its unique, its terroir, its origin, its unique values. That is women owned, women produced. Aggregation, I'm sure that Charles will be telling us a bit more about producer organization, as well as Yola Ruth, just aggregating so that there is, that risk is distributed. And then again, when you aggregate, you can buy a warehouse and do some other, you can invest in other risk management mechanisms that quite frankly aren't affordable or accessible to an individual smallholder. Flexible sales timing with warehouse receipts. So again, producer can go sell their coffee to the warehouse. It goes in the cooperative warehouse or the government-owned warehouse, the exchange warehouse. They get a receipt for the value. They can take that receipt to the bank and they can get a loan. And then whoever owns that stock in the warehouse is then able to hold it and sell it when the market has the best price, instead of instead of having to sell it all at once and there's a big glut in the market. We see that a lot with some storable commodities, grains and cereals, can also be done in coffee. And then, again, reallocating risk. So you're having a contract where there could be an optional differential, where say that the seller could pay a little bit more to have a guarantee that if the price goes up to a certain level, I will get that price. And options trading, which can be integrated, into those contracts, but also a separate thing. That's something that USAID has been working on with Farm Africa and Oiko Credit, and they'll talk a bit more about that. And that's, all I've got for those, but I just did want to give a little framing up. So, I'm with USAID and we have coffee work around the world in about 18 countries. And we realize that, you all realize that smallholders face enormous risks, enormous financial risk. Our goal at USAID, we're the government's International Development Relief Agency. Our goal is to help countries, to help societies, to help market systems, individuals get to a level of self-sufficiency, of resilience. And if we don't address things like financial risks, we can't get to that point. We want households and producers to be able to thrive rather than just surviving, to be able to afford healthy diets and desire those healthy diets, to be able to send their kids to school, and really to be able to move up in the value chain and be investing and have agriculture as a real driver of growth. So without addressing those risk factors, could you mute? I think maybe I'm getting a little feedback. So without addressing those risk drivers, we can't achieve our objectives at USAID. And without addressing risk, none of us in the coffee sector can achieve our objectives to have thriving businesses. So with that, I'm going to proceed to the panel questions. And the first question, so I'm going to start just, in alphabetical order, Farm Africa first, and then Oiko Credit. We just in a nutshell, can you, summarize your work supporting smallholders and buyers in implementing smallholder risk management? So just so the audience can get a sense of what are some of the things you do here. For example, the services you offer, do you work with smallholders or buyers or both? So let's hear from Farm Africa on that question. And if you could mute when, and I'll do that too. Let's all mute when we're not talking so we don't get feedback.
Yeah, thank you, Melissa, for starting up the discussion. On the side of Farm Africa, we are an international organization, which is UK-based organization, working to introduce or to use the PRM tools and the strategies to introduce them to producer organizations, and then we work in collaboration with different stakeholders, including agricultural lenders, and we focus in 5 key coffee growing countries, which is Tanzania, Kenya, Ethiopia, Uganda, and Democratic Republic of Congo. And then usually our approaches involves training of the producer organization staff on the subject, like for this case, price risk management. And then and that training would be done either physical training or online training. And then it will also include technical and fundamental analysis of the international coffee prices, things like inventory management and different financial tools. But also we provide kind of mentorship services to cooperatives, and then so as they can utilize those tools effectively, because we know that they need also to implement them in order to see what really is the success or achievement of utilizing them. Currently, Farm Africa works with, as I said, with financial lenders or credit facilities. So in this case, in our project, we work with Root Capital, who provides credit to the producer organizations who will be de-risked after going through the price risk management training. We don't work directly with buyers, but then buyers will benefit out of the producer organizations being able to manage their inventory and also fulfill those contracts, because it will be indirectly that way. And also we are not only providing financial or financial risk management training, but also we are providing a kind of governance and then overall management training, so as you have good governance, so as it can help to propel the approaches, the price risk management approaches and tools. And then the last thing probably to know about Farm Africa is that we also most of the time when we are looking at the management, the governance training and the management will also help the physical inventory, because when the producer organization do start off, they cannot implement some of the approaches. So to start off, usually most of them can do the physical inventory, so as they can fulfill the contracts that they have at that point. So thank you so much.
Yes. Well, in my case, Oikocredit is a cooperative. It's a worldwide cooperative, and we consider ourselves as a social investor. And we work with basically smallholder farmers organizations in agriculture, so that we offer financial products, services, but also non-financial services. That's our main work. And of course, in this panel, we will speak more about the capacity building programs we've worked with our partners. We call our partners to those organizations.
Great. And Yola, did you have a slide you wanted to show now, or
or later? Well, we can, as you wish. Well, this is something important for us, because as we are an investor, we are a lender. So when we do an evaluation of the organization and of the farmers, we have clearly identified the risks the farmers face. And of course, we've tried to integrate that to the organizations, so that we know the strengths of each farmer-based organizations, and also the weaknesses they have. And based on that is that where we work. We have focused our efforts on capacity building since the beginning of our work, in this case with coffee organizations, is that you can see there, the different risks. And of course, we started mainly with performance or management risk, where it was the basics maybe, because this performance risk is more about the support that the farmer, the producer can get from an organization, for example, all the part of the logistics, all the part of the setting a strategy for the for selling the produce, the prices they have to set, the fix, the margins they can get. So all this around is a big risk that an individual farmer can face, no, if they want to sell their produce. But when it's organized, it's maybe mitigated, but still the organization as itself has a very big risk there to ensure also the productivity and the quality of the produce, the physical and security, because of all the part of the logistics and transportation is very important. Climate change, because that's another one that it's we are still working on how to work with it. Governance, and which is maybe governance is a risk that as a farmer individually may not have, but when they become part of an organization, it is a really, really big risk. And price volatility, which is more in the case of coffee, because it has become a very important risk that needs to be mitigated. And that's how Oikocredit has been working. Maybe 15 years ago, we started with capacity building programs, setting on performance, and as well as the organization improve certain areas, we've been progressing on these capacity building programs. And nowadays, we are focused, at least in Latin America, in the price risk management, which it's actually at the end has to be a little bit more, let's say, we have to see the overview, because we cannot get or work into the risk is individually. We have to, at some point, manage a mixture of risks, and the programs need to include many of the risks. For example, what we've learned in our work is that governance needs to be a mainstream in any project that we manage, because you can be perfectly educated, the staff may be trained and have all the resources, but because of governance issues, it can fall down. So that's how we have our strategy towards the capacity building programs we offer to our partners.
Okay, great, thanks. So the next question, and I'm going to have Oikocredit start out with this, and then we'll have Farm Africa add. And just a reminder, we are trying to run through this panel in a pretty quick clip, so we have time for questions. We'll have about 4 minutes total for each answer. I think we just actually lost Yola Wraith for a bit. So I'll start out with you, Charles, and Farm Africa. So what are some entry-level, mid-level, and more advanced steps that smallholders, buyers, and supportive lenders can take to support smallholder financial risk management? And broadly speaking, what resources and capacities do smallholders and buyers need to implement these?
Thank you, Melissa. So for our side, we see that the one of the most important entry-level thing that needs to come from the two sides is that, for example, for producer organization, they need, first of all, to have buy-in of the senior management team or management leadership. Usually that is the board of the producer organization, which it depends on the producer organization. Probably there can be 5 up to 10 or something like that. They need to have willingness to participate. First of all, understand the price risk management itself and techniques and approaches, but also have some time to implement them, because the approaches and tools, they need some kind of some time to implement them or to make a follow-up or to do everything. That is on the side of producer organization. But then on the side of the buyer, at the beginning of the price risk, implementing price risk approaches, buyers need to have ability to hedge or to handle, to manage the risk that is coming from producer organization. They need to be able to do that, because at the beginning, that's when they are starting up. So they are catching up to the speed of managing their risks. So they need the buyer to do that. And then on the more advanced, I will skip a bit the mid-level, because for us, we really did not have much on that one going on. But on the more advanced, we have producer organizations that needs to integrate their data into management system, making sure that they change from conventional data collection to management system that can be shared with the buyer, or it can be in digital form or something like that. They can even go to advanced level whereby they can put it in digital form or something like that. And then they need to make a decision according to the data that they are collecting. So things like field operations, for example, they need to know how to promote their volumes, and so as it can relate to what they are selling out. And then sales, like contract details, they need to have that documented, but also put into the system in order to have all of those things managing. And then you have finance, whereby you have cash flow, cash in, cash out. So as all of that can assist when they're implementing the strategy, because it helps a lot to implement the strategies, having those kind of data in one area or one platform or one media. So that is our experience when it comes to what kind of commitment is needed. Thank you.
Okay, great. And Yolanda, do you have anything, to add, and specifically about, sort of this entry, mid-level, and more advanced steps, so that, different entry points for different types of producer organizations, buyers, and lenders?
Yes. Well, yes, I agree with what Charles says. No, the first thing is that the organization, the farmers, the producers, are really understand what the risks they are facing. So that's the first thing. So from that, I think it's easier for having an implementation of any kind of risk mitigation. So I wanted to add maybe, and this is more on the understanding for us of the PRM. And I have a slide, maybe can be shown, because all what the Charles said, yes, that's very important. And we have the next one. Yeah. So this is what we call the steps to mitigate price risk. So we in the project we organized the steps the organizations have to follow. So from a harvest evaluation, the harvest projection, the market analysis, the physical coverage strategy, and the financial coverage strategy. So those are our steps, and many of the points mentioned by Charles are actually goes to the physical strategy. So having a good logistics inventory, have information on time, sales, have a good management of the sales, understanding the contracts, and knowing their margins. So this is something that helps for the organization, as Charles mentioned, to really take decisions if they need to go to a financial coverage strategy, which means the use of options in case it's needed. So this is, I guess, what I can share.
Okay, great, thank you.
Yeah.
And so the next question, you addressed this a bit. So we'll have Credit go first, and then Farm Africa. What types of financial risk measures are accessible, for individual smallholders, and which are generally accessible only for, aggregated smallholders such as contract producers or larger producers, or, say working through a buyer or a lender? So we'll start with Yola Ruth first.
So at individual level, it's more difficult, I think, for the farmers to have access to resources. In some countries, the governments do have a ministry, and they already have some projects related to risk management. But I think that when the farmer or the producer has access to to his peers or to her peers, no, that's the first step, no, to get some resources, because normally the peers, the other producers can have more information, more access, and when they become part of an organization, definitely they have much more resources on how to implement their mitigation of risks. So in our experience, when we work with the farmers and the organizations, when we speak with farmers, they normally don't find also, sometimes they say, yes, I have a benefit from the cooperative, but sometimes they say, I don't. So this is something important, no, that the organizations really offer these benefits, and the benefits are not only trainings, but also having this good mitigation of these risks, like climate change, like the price risk management. But I can also add that for individual farmers, there are some resources like financial literacy, for example, that it's more available. That's very important. And also, in some cases, they can get some financing for their crop work. But on the other side, as definitely as an organization, they can get much more on that sense, and they really can mitigate much more risks. So, yeah, this is, I don't remember the other, but this is basically what we find. And ECCA, we work with organizations, with our second tier organization. So it's easier, I think, for us to get to work with farmers, but already organized activities by the staff. So that helps a lot. And for example, the organizations do have technical assistant people also that can support those resources. But still there much to do, like the standardization of knowledge, like systems, no? Some cooperatives or their projects related to getting the farmer more into technology, so that also they can get more resources. In our work with ECCA, we have, for example, included the WhatsApp groups, no? Because now if producers already are using technology and sending videos, that's a good way of giving them resources for improving. Sorry for the time.
Okay, great. And now we're going to jump on to the next question. So we'll start out with Farm Africa, and then we'll hear from EcoCredit. Can you outline the process that you take smallholders or partner buyers through to get them started with financial risk management?
Thank you, Melissa. So with how we start to implement the approaches is, one is that we do comprehensive baseline at the beginning of the activity, in this case at the beginning of the project, whereby we collect data on 4 key areas. That's number 1, management. Number 2, physical purchasing, like how they do their their harvest forecasting, but also monitor practices. And then number 2 is financial strategy, like how do they practice when it comes to coffee prices? How do they like manage or know where to get the right prices? And number 4 is the internal system. What kind of data integration do they have within their departments? As I said previously, they need to have operations, finances, and other departments, all of them to be together. And then the last one is governance, because we need to know how is the board working and management of the cooperative working, because that's very important element when it comes to price risk, because we need the buy-in of the top senior management team of the cooperative. So those are the 4 those are the 4 areas that we are looking at. But then after that, that's when we start the training itself. So the training itself would look at things like coffee market price dynamics, contracts, on how to read the contracts, on how to understand the contracts. And then you have how the internal operations of the cooperative, on how they do logistics, on how they do their finances, as I said. And then you look at the market fundamentals, and then you look at the market strategies, sales risks, and then what kind of tools do they have when it comes to hedge, et cetera, et cetera, et cetera. And then that would help the cooperative to be de-risked. So as for our case, the reason why we assisted the cooperatives to go through the training was to access credit from root capital, who are the lenders who are giving kind of credit to the producer organization. So all these are the processes that the producer organization went through, so as they can start with the financial risk management on our side. Thank you, Melissa.
Feel free to briefly reference anything Charles said, but would love to hear about your unique process, as well as the assessment with the spidergram, if you're willing to share that.
Yes, sorry, couldn't hear you. Okay, yes. Well, in our case, as I mentioned, we've been in a process for many years. So our first attempt was working with the staff first on this financial risk management. Then we included board members. So and this, we also had all these projects about financial literacy, financial management. And with PRM, what we do is like we try to have these steps going into a program where we identify, we categorize the partners in 3 levels: basic, intermediate, and advanced. So this also helps. So it also helps us to identify what are the needs of each partner and where they have to go. And as Charles mentioned, so depending on that, we work more with board members also. There is a basic, we try to include there all board members. And then we also have this strategy of working with 3 members of staff. It's not just one. We need to have the sustainability of the knowledge that they are getting, the organization is getting. So that's a strategy we have. And what we've done is we offer different components. We have the trainings, but we also have the mentoring programs. We also have the peer-to-peer sessions, and those helps us to make a continuation, not only to give knowledge, but also to implement. And that's maybe what takes more time with individual sessions. Thank you.
Okay, great. So, something that's very important to us in the coffee sector and the development sector, and thankfully more important globally now, is diversity, equity, inclusion. So we'd love to hear about, what are the key diversity, equity, and inclusion issues that you encounter in your price risk management work, and how do you work with your clients to integrate these and improve outcomes related to diversity, equity, and inclusion? So we'll go with Charles first, because you're ready. There you go.
Yeah, thank you, Melissa.
I know you're both ready, but
yeah. Thank you so much, Melissa. It's one of the interesting things that we learned through this project. As I said, we are working in 3 countries. We were implementing the workshops to 30 cooperatives from 3 different countries: Uganda, Rwanda, and DRC. Few things that we have noted is that which is basically more of cultural thing, or I can say it's natural. It's something that has been there for very long time. That the value chain, the coffee value chain, is mostly dominated by men. And then that also starts at the producer organization level, whereby you have members, women or female members, fewer than men. You can have like two times men as members of that cooperative compared to women. Now that also goes at the management level. So one of the things that we really got was to have very few participants, women participants in our training. So you can see, like, for example, we invited a bit more than 100 participants, but then out of those, only 50, which is a half, were from the senior management team. So just by itself, when we were inviting them, we realized that most of the senior management team members of the cooperatives are men. And then the completion also, you have fewer women completing the course, because our course was being administered through online platform. Now, there's an issue of accessing technology. Now, things like computer, things like internet access, like buying bundle, etc. Men can afford to have smartphones or to have laptop compared to women. And then you have things like internet access, like credit, and buying bundle, etc. And that's why also it's caused, at the end of the training, we have 65% men completing the course compared to 35%. So 65-35% between men and women. And the last one is that for the 3 countries that we are working on, 2 were speaking English, and 1, which is DRC, they speak French or Swahili. So I speak a very good Swahili, jambo bwana. But then we had to translate, we had to put subtitles on some of, not some, but all of the modules, so as the DRC participants can follow on. And that was something that we planned at the beginning when we were starting off, and then it helped a lot to include the participants for DRC. We also had supporting Zoom calls. We made sure that we have a translator who can also translate for the participants from DRC. That was very useful for inclusion for participants from DRC. So those are the 3 points that we went through, and then we realized as we were going along implementing the project. Thank you, Melissa.
Okay, great. And Yolorith, do you have anything to add? And this will be our last panel question, and then we'll jump into answering the audience questions. We'd love to hear your answer.
Yes, just to add about, well, in all our programs, we include the farmers and staff together. No, this is important that they have a link, and activities are done based on the organization. So they need to work together, and this is important part for governance. No, if they need to make plans, if they need to make plans of implementation, they can do that together. Another point of women, yes, we put a quote of the number of a percentage of women that should be participating, even if they are not members or of the organization, but then maybe they are the wives. And young people also, it has been very important, especially last year with the COVID, because they were more into smartphones, or at least into technology, and they really helped a lot in the virtual sessions. So, and actually, I can say that based on our results on the project we had, we find that the organizations that really advanced more were people conformed by young people, and also including women in their management team. Thanks.
Okay, great. And now we're going to take some of the questions that were in the audience chat. And so the first question in the audience, well, not the first one we'll do is, how has the current price surge affected producer organizations in East Africa and Peru, particularly with related to price risk management? So, how is it affecting them and their strategies around this?
Okay, I can answer if you want. In Peru, we've had, this really was an issue because at the beginning of the harvest campaign, we had organizations that decided to actually use more options, not financial strategy due to this. So that was a problem for the organizations that started negotiating contracts later, like in May or June. Why? Because they couldn't find, that's what they told us, they couldn't find buyers that wanted to negotiate at that time at such high prices. So the organizations that really had did their task of analysis of market and already had a physical strategy, decided to protect themselves with the financial strategy. But of course, the organizations at the beginning have been not, let's say, using a lot of funding from us. But in the later months, yes, they have. So this is what has been happening, but it has been a huge impact, yes, with the cooperatives.
Okay, do you have anything to add on that question, Charles?
No. I don't have anything to add. I think you already presented everything that I wanted to say. Thank you.
Okay, great. And now I'm going to combine two different questions that are good. And I love when these questions always come up at SCA events. So two questions about changing the model of the industry, something that SCA actually has a report and analysis on the price crisis management, and talks about changing value distribution, changing how we interact. So Ted Williams says, there's a lot of talk in specialty coffee to help farmers, but not a lot of companies actually close multi-year contracts and or pay up front. How can we change this? Understanding that cash flow on the buying side is an issue. Can bigger companies or importers help with us? And then Johan Arenas says, as a social entrepreneur and new to the industry with a vertically integrated model, I found most of the resources offered in Colombia, specifically by local co-ops, don't have the welfare of the producer as the main mission. How can we create a new model where the well-being of the producer and the environment are the mission? So what are some ways that we buyers, traders, support organizations, lenders can support more equitable long-term contracts, as well as organizations organizations and buyers that are really more oriented to the well-being of the producer and the environment? I know, big vision question.
Well, I can mention in our case, it also has been like a progress again, because when we started working with agriculture organizations, the risks, we could find out was very, very high. So that's why working with in these capacities for mitigating risk has helped a lot to these organizations to get financing. Of course, better prices, because they manage better their production, their quality. So that has been a lot. The other is how to make this more on a global perspective, looking at the whole risks. Like I was mentioning, climate change, for example. So, in our case, EcoCredit, we are now piloting some projects, where we are the financing component. So, to design new products, financial products for offering these cooperatives. And of course, we have also this capacity building area that to improve, to have activities about climate change. So based on that, we can design and really get the needs of the farmer and the needs of the organization, no? Because many times as investor, we decide to put a product that, or a service, a financial service that is based on the needs of the investor and not on the needs of the farmer. So I would say that could be very important. And the other about Colombia, yes. Well, Colombia have a different situation with the federation, but definitely in our case, when we do an assessment of organizations, we have not only the analysis of the risk, no, the evaluation of the risks, but also the evaluation of the social performance and environmental performance of the organization. Meaning that if there's really an intention for getting the welfare of the farmers. Yes.
Okay, and anything to add, Charles?
Yeah, adding into what Yori was saying, I think for the producer organizations that we are working with, the 30 cooperatives from the 3 countries are very small, meaning that they are still on the way of growing. So what can the sector do to make sure that the producer organization do come up with the price risk strategy that can be helpful? Number one is for buyers to take some of the risk for the cooperatives to start off, because that would help most of the cooperatives to grow, or not to grow, but not only to grow, but also to give a service to the farmer, to the smallholder farmer, which can be impactful. For example, why should the farmer bring the coffee to the cooperative instead of selling to the side buyer who provides higher price? So the cooperatives needs to give the second payment. Now, for the second payment to happen, they need to know how to manage when the price goes down, and that's where the buyers come in. They can take some of the risk at the beginning of the season, like one season, and then making sure that as they progress forward, that risk is also a bit transferred towards the producer organization. It can be shared as they move along. But then at the beginning, there needs to be a lot of efforts to make sure that not efforts, but more of buying in by the buyers at the beginning, so as they can help the producer organization to take in, and then that will be transferred to the individual farmers, so as they can understand how that progresses.
Okay, great. Well, thank you so much for your participation, Charles and Yolaruth, and for our audience for the good questions. We do have a few questions that we will answer in the chat on the Summit website. We'll make sure that we get to those, and we will also be posting some resources. We can add some resources to the Summit library. As you know, the Green Coffee Summit is not only a fantastic new 2-day event, but it's a living library of resources and engagement. So we are excited that SCA has launched this, and appreciate the opportunity to do this panel. So thanks all.
Yeah, I'll just piggyback on that to say thank you also to you, Melissa, for putting this whole panel together, and Charles and Yolaruth for sharing your experiences with us and giving us some direction when it comes to the topic of price risk management.